the focus today is definitely on earnings. In terms of some of the supply chain concerns and energy price crunches, are companies going to be okay?
Thank you, Francine. Good morning. Actually, the earnings season so far has been surprising me on the upside, because really what we have seen over the summer has been a progressive deterioration of the economic momentum, whilst on the EPS front, so on the corporate fundamental, we have not seen such repricing. So it will be very interesting, and for us, it's a real test on the real economy to see how the reporting season will proceed. I mean, as you said, the slowdown on the economic front and the pressures on margins.
So, Monica, in this kind of environment, what would you be buying? I know there's been a rotation in terms of some of the industry or some of the sectors that you like. Will that just continue, or could inflation upend everything?
Well, I think that what it is wise to do is really to follow this interaction between growth and inflation. And this is really what is driving our investment positioning. So it is not time to take on straight directional overweight into risk asset, rather staying in the relative space, which means, for example, having a preference for those sectors that are more value-oriented, more quality, and somehow defensive. So we can blend energy, healthcare, luxury, favoring those sectors that show some pricing power, like luxury. But it is really a matter of alpha and correct selection of the sectors and of the stocks.
Monica, is there anything at the moment that, is due a big correction? Again, I don't know whether there's a big policy mistake coming. We talk a lot about the UK and the fact that, we could envisage some kind of scenario playing out where the Bank of England has to increase rates and then cut them fairly quickly. Is there anything that you think right at the moment just looks expensive?
Well, everything looks expensive. If you turn to the risk asset, broadly speaking, the top line is extreme in its valuation, and this is a risk per se. When it turns to the Bank of England, but more in general, the central banks are not at all in an easy position, as they have to preserve easy financing conditions. So they cannot afford to shrink their balance sheet, but at the same time, they are looking for a way out from their unconventional monetary policy at a time where growth is going down and inflation is going up. And this is the reason why we are neutral when it gets to the equity exposure, global equity exposure, for example, but we still remain tilted into the credit space. So valuation are extreme. This is for us a risk, and this is why we are a little bit cautious at the moment.